Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. The closing hour is progressing on a week on 250 points gone there as far as the Nifty is concerned. 22,842 and thereabouts is what we are at currently on the Nifty. It's been an absolute choppy session. Look at the India Wix, 7.3% higher at 17.9 odd levels. So the volatility index is consistently moving up. All the sectors have slipped into the red. Remember in the morning trading session we were talking about there were some gains on FMCG, on Realty Pack, on PSU Banks. All of them have also slipped into the red. Now, of course, the media stocks are the worst hit. 4.5% loss for the Nifty Media index. You have the small caps that's down nearly 4%. IT index that's down 3.3% viewers. Then you also have the metals, pharma, and even the oil and gas consumer durable pockets that are weaker in trade. Private banks 0.4% down in trade. Largely stemming the fall is ICICI Bank, which post the earnings has gone up about 1.6% up in trade. It's the top mover as far as the Nifty is concerned. You have Britannia, M&M, HUL, Maruti and Axis Bank as the only few movers in the green side as far as the Nifty stocks are concerned today. Where is the pressure coming in from? HCL Tech, look at the sharp fall here, 4.5% lower. Wipro, Tech Mahindra, all IT related stocks are actually weaker in trade. You also have Power Grid and Hindalco as some of those energy power related stocks that are actually lower in trade. Let's welcome our guest on board. We have Prashant Tapsi joining in as a market expert of the day. Prashant, warm welcome and thank you so much for taking the time out. Well, the budget week has actually kick-started on a somber note. There is a lot of nervousness that is creeping in into the markets. Tell us what is it that you are penciling this fall to, and do we go even further down from here?
I think yes, the concern is continued to come into Indian markets. There are three, 4 points. One, weakening global markets. Again, Trump 2.0 has a lot of new dialogues coming in the Indian markets. Again, Chinese doing some AI related announcement last night, and a lot of selling pressure also coming from the DIS. And I think there are a lot of redemption going to happen in Indian markets, considering the last 1 or 2 months of beaten down stocks. Mid cap and small caps both are having a lot of pressure and a lot of selling pressure. So multi news flow from the global markets as well as the domestic Q3 earnings which are not up to the mark, and the concern of budget which is almost this weekend on Saturday. So there are a lot of people or traders are being on a sideways, not to be too much aggressive to take any call at this point of time, and supported by a lot of bad earnings today. So these are things why markets are under pressure, and one should also wait and watch for new dust to settle down.
Got that. All right. Let's actually look at a few pockets then, Prashant, to get us a sense of where exactly should one be looking at. First up, help us understand your view on the banking space, especially ICICI Bank post earnings. That's the one that is bucking the trend for the markets right now. Along with it, we are also seeing some gains come in as far as the PSU names are concerned. Remember, again, this is going to be an interesting pocket to watch out for. First, you answer on ICICI, then I will extend my question on PSUs for you.
I think ICICI has delivered a very good numbers, neutral to positive. I think the growth in terms of NIM has really in line with the street expectations. Technically, I think even the stock is really strong today, and it is only the stock which is supporting Nifty as well as Bank Nifty. If we had no ICICI Bank today, I think we would have been down another 50 points to 100 points from the Nifty as well as in the Bank Nifty space. So overall, a neutral to positive. I think only because overall broader markets are weak. India ICICI Bank is trading only 1.5, 1.6% up today. If markets were neutral to positive, I think we could have seen at least 5 to 6% up in the ICICI Bank today. The way how Kotak Bank has resulted on the same result date. So overall positive, and I think one should also have a hold call on ICICI today.
Okay, got that. Let's go ahead and look at some of the other pockets as well. Prashant, I was looking at the PSU banking names. Some of them were buzzing. And why I wanted to ask you is that there is some kind of an expectation if the OFS route is taken by the government in the budget to announce a few more stake sales right there. Will that bring back focus on the PSU banks? Are you looking at some?
I think yes, that would be only one reason why investors are showing some kind of interest in the PSU sector stocks. But even though if you see a lot of Q3 earnings, there are some kind of positive momentum in terms of deposit growth as well as in the credit growth in companies like DCB Bank, companies like Union Bank. I think there are some positive results with respect to their earning ratios as well. So overall, that would be one reason. Again, the OFS reason which you said right now is also pushing this sector on the positive side. Overall, I think investors are morely focusing on PSU sector. I think budget is very near, and there may be some kind of announcements coming down the line in the budget for a stronger PSU banks for a stronger GDP growth for next 1 year. So I think that these things are pushing positive sentiments for PSU sector.
Okay, got that. Prashant, I also wanted to ask you on this mid and the small cap kind of a sharp fall that we are looking at. I mean, look at small caps. It's if we look at the kind of fall that we have seen, it's almost 12% down from its highs as well. That's the kind of dip that we have seen on small cap index. 3.5 to 4% low in trade today. Also, probably when we look at the kind of losing streak, probably the worst losing streak we've seen for small caps post-COVID. How are you looking at the sharp sell-off in the mid and the small caps, and what does that indicate to all the retail investors, since large part of their portfolio allocation is towards these two sectors?
I think you rightly said with the retail investors, almost 40 to 50% of the portfolio lies in mid cap and small cap. Two reasons why things are down again. One would be the Q3 earnings, which are not up to the mark. Margins are not improving. The PAT margins are not improving. Even the management in few companies, I think management is also giving a very lower guidance. If you see Credit Grameen Bank management guidance, they have lowered their guidance from 20-22% to more than less than 5 to 6% growth. So such kind of management concern statement is also keeping some kind of pressure in the mid cap and small cap sector. But again, major focus would be on the Q3 earnings. Second, I think the pain is now too much in the portfolios, and there may be some kind of panic selling seen in the mid cap and small cap because from last 3 to 4 years, I think post COVID, no retail investor has seen such kind of market from last 2 to 3 months. Post September, once we made the all time high, from that day to till day, they have not seen any a good strong closing weekly or monthly basis. So I think there's some kind of panic selling is also coming, and obviously they are trying to sell off their portfolio at least to safeguard whatever they're running today with lesser profit or lesser losses in their portfolios. And budget is a major concern. There may be some kind of surprises which can even dampen more sector pressure.
Okay, let's look at the broader markets right now, but there are some names that are actually defying the trend today and are actually doing better. Let's see some of them. Happy Forgings is up by 3.8% today. Landmark Property is up. Some of those real estate stocks like even Sobha is up right now. You also had some of the other stocks in the morning buzzing in trade as far as the real estate names are concerned. Then you also have DCB Bank again after earnings 4% higher. DCM Shriram is up by 4% today in trade. IDBI Bank is also buzzing higher. Again 4.5% of an uptick can be seen on this one. Some other interesting names include like Swan Defense, that's up nearly 5%. SMS Life Sciences is up 5%. RPG Life Sciences is up almost 9%. We were discussing the banking names. We have Bank of India that's been buzzing sharply since morning. That's holding up. Epigral is also up by about 5%. Heidelberg Cement, that's another one. So various sectors. Adani Wilmar is moving up after earnings and several stocks that are buzzing. Anything that catches your attention within the buzzing zone today, Prashant, as far as the broader markets are concerned?
I think very limited. One would be Adani Wilmar. Again, numbers are good.
Okay.
I think even the big names like the whole deal between the Adani as well as Wilmar, that is also out of the question right now. So I think earnings better than expected earnings as well as long term visibility with respect to Wilmar focus on the business. I think that one stock should be focused. Again, I think the negative sentiments of Adani being in the group is almost out right now. So overall, in this pack which we discussed right now, Adani Wilmar looks good, but rest, I think even every 10th stock, I think there is a negative momentum in the markets. So overall, I am waiting for a right momentum to come into a mid cap and small cap. Time being, wait and watch.
But Prashant, are there any stocks which you're looking at ahead of the budget? Have you penciled any that you are looking at for clear benefits coming in? I mean, even if there are no sector specific big bang announcements, we do know that the government will probably give a higher allocation to capital expenditure this time around. This will again keep focus on infra. So the basics over there might also come in. What is your expectations on the key stocks ahead of budget?
So see, we are almost like 3 4 days down the line for budget. Even though market sentiments are not at all focusing on any budget kind of rally. So I'm just keeping budget as an event, only focusing on more on the consumption story. If they do some kind of allotment, more allotment towards the agriculture, more allotment towards the infrastructure. That will only benefit the sector as a whole. But time being sentiments, one should keep this budget as only as an event, or not to focus any sector right now. I'm not giving any importance to budget right now because of the markets are so brutally, in the bad space right now. Only surprises like income tax, the range of income tax would go higher and give more money to the consumer or investors to invest more or spend more. That is the only one which every middleman is asking right now.
Correct, absolutely. So that's as far as the common expectations from the upcoming union budget right there. When it comes to, expectations, of course, every time ahead of the budget, there are big bang announcement, big bang expectations, but rarely do we see all the expectations meeting ground. What could be a deal breaker or a deal maker this time around in budget, Prashant, according to you?
I think if they give a lot of importance to the capex or the expenditure by the government, the way how we have seen H1 was very much bad due to the election reason, and H2 also is very much neutral to subdued. If they plan to increase their expenditure percentage by 15-20% or more than that, so that will give a lot of push to the overall infrastructure or any other sector. That is the only thing. And government focus should be more on the GDP growth right now, because we have seen almost 22, 23 months lower GDP growth. So that should be the highly focused, and a lot of consumption based announcement or expenditures government has to focus more.
Okay, as far as the expectations go there, let's look at some other pockets as well. FMCG space is something that I wanted to discuss with you, Prashant. Today again, we are seeing some of those defensives come back to fore. Britannia, HUL, ITC, Nestle, Dabur, for instance, as well. And every time we've seen heightened volatility, probably investors just go to hedge their portfolios by looking at a more stable set of numbers, and that's largely from the FMCG pack. What's your own take here?
I think yes, rightly said. When markets are in a very bad shape, people try to defensive go to the defensive stocks like FMCG. Plus some kind of expectation from budget also. If there's an increase in this tax slab towards 12 lakhs or 15 lakhs, that can be a surprise to the market. So that will obviously give a lot of money in the pockets of the investor to spend more. Obviously, these stocks like Britannia, Dabur, HUL, ITC, such kind of stocks will have a major benefit. And I think that is also missing. If you see a lot of FMCG results, there are very flat to negative volume growth. So that will be affected. At least there will be some kind of revision in the guidance from the FMCG companies to give at least 4 to 6% volume growth going forward post the budget. So I think that can be one reason why FMCG is very much in focus today.
Okay, got that. So that's the view that's coming in as far as the FMCG stocks are concerned. Let's look at some of the other pockets. Within the FNO space today, there are some buzz. Torrent Pharma is buzzing 2.6% higher. After a long haul, this stock is coming back into action. Prashant, pharma space, what's your take overall? And anything that you'd like to say on Torrent?
I think surprisingly, yes, this stock is up today. But if you see other stocks like Cipla, Laurus, Sun Pharma or Granules, everybody is down to 2 to 10% at least. So
Yeah.
yes, I think there is some kind of positive news can be expected in Torrent Pharma. Very strongly looking at in the charts. I think if anybody would like to buy with a target of at least 3400 to 3500, can be a possible trade for 1 month. So overall looks very strong on charts.
Okay, got that. So that's the view as far as the pharma space is also concerned. Let's understand some of the other pockets as well. Today, M&M is actually coming back into flavor, 1% higher for this one, 28.34. For those who've been holding on from higher levels on M&M, they've been wondering if it is the right time to average out their stocks within M&M. What's your own sense here?
I think yes, I am very much positive in terms of MNF business model for a long-term investor. But I'm still waiting for a right level to buy. I think my level would be anywhere between 2600 to 2700, which can be a great level on a technical basis as well as on a fundamental basis for long-term investors to add more and accumulate. So I'm waiting and watching for the levels to come.
Got that. Okay. Let us also look at some of the other pockets then, where else can we focus on. Why is the IT pocket sharply lower in trade today, Prashant? What are the key reasons there? I mean, like, 4.5% kind of a loss on HCL Tech. The rest of the pack is also crumbling today. do you think the last few weeks of continuous momentum has now been taken out now? What exactly is in the offing? This is despite the rupee support that the sector has been getting. Earnings have been by and large okay. Mid-cap IT names were coming out with better earnings, but the entire sector seems to be under pressure today. What's the sense here?
I think two reasons. One would be the profit booking attempt from the investors as well as the traders. Second, I think there is lesser spending towards Indian IT sector. I think Trump 2.0, there will be some kind of announcement which can dampen the sentiments of IT spending in US market, and I think that will majorly affect the Indian companies because we have a larger focus towards the Western countries. Second point, I think there are some kind of updates seen from the China again for a AI-based technical and technology investments, which can disturb the whole world with respect to technology investments. So that is also keeping the overall Indian IT industries under pressure. I think morning there was a very flat opening, but post the news from the Chinese sources, so I think that started keeping a lot of pressure on the IT stocks.
Okay. That's as far as the IT names are also concerned. But Prashant, forever favorites ahead of budget is PSU stocks largely. How would you approach this space? Anything, any sector, any particular stocks within the entire large PSU basket where you feel investors can still focus on? I mean, we are seeing a missing action in railways. We are seeing a missing action in defense. Like you rightly pointed out, the pre-budget rally in these all-time favorites is missing largely because there is again anticipation as to whether there will be some substantial announcements or not. But larger PSU names, they've also had correction. They have corrected quite a bit. Where do you find comfort?
I think PSU banks like SBI, Bank of Baroda, such kind of banks can see some kind of positive. If you see today in this market, 300 points call market, SBI is holding very strong on chart. So I think that is a sense of understanding which I am going to read from the price action. So I think PSU banks, SBI and Bank of Baroda should be focused considering the very shorter period of budget-based announcements or trades.
Okay, got that. Bank of India is in fact higher also today, about 6 odd percent of a move can be seen on this one. You also have IDBI Bank that's also up by 4.8%. So some of these smaller banks that are actually up in trade today. Apart from this, Sumitomo Chemicals is buzzing. You have Sobha within the NSE 500 list that's also buzzing within the real estate space. Okay, another space was chemicals and fertilizers. Again, there is a lot of expectation that something will happen in the budget that will prop these stocks higher. What's your own sense? Anything that you like here?
I don't track this sector, but overall, I think what I am reading in the markets right now, specialty chemicals as well as the chemicals in terms of valuations, almost they are trading at a very lower levels right now. So any surprises from the capex from the companies like all the chemical companies, SRF and other. So I think there we can see some kind of positive momentum coming in. But in terms of liking, I don't like any companies right now because I don't track the sector right now.
Okay, got that. Well, Prashant, what we'll do is we'll thank you on that note for being with us on the show and helping us with all your views right there. Markets have further lost a little bit of momentum. 270 points now gone, 22,820. So we've tested not just 23,000, but we've tested 22,900 also. And now we are nearing 22,800 basket as well. Sharp losses being seen on the Nifty, 1.1% lower. The Nifty Bank is slightly better off with 48,000 protected on the downside right now, 340 points lower at 0.7% losses, but largely this was the private sector banks, especially ICICI Bank, that pulled up the Nifty Bank from the weakest point in the day right there. Sectorally, all the action was muted. All sectors, slipped in the red today with sharp losses being seen on IT stocks, on the media index, on the small caps, particularly on consumer durables. These were the pockets that have actually lost ground in trade today. The top movers in terms of the stocks on the Nifty are ICICI Bank, Britannia, HUL, M&M, and also State Bank of India. But top losing action was seen in HCL Tech, Tech Mahindra, Wipro, Hindalco and Shriram Finance. In the F&O space, you had Bank of India definitely outperforming today, 6% higher. Torrent Pharma came in next. Federal Bank, Yes Bank were the others that moved up as far as the F&O space is concerned. But on the lower end, Laurus Labs slipped 11 to 12% odd lower in trade. CDSL, IDFC, First Bank, Piramal Enterprises were the other top laggards. Look at India Wix. We were talking about 7.3% higher. as we moved closer to the market's close, it's an over 8% surge on India VIX right now. We're above the 18 odd mark. It's nearing the high point. You look at 18.13 odd levels can be seen on India VIX. That is the pain point right now. The screen has frozen 22,817 as far as the Nifty is concerned. Not a good start for the budget week for the markets. Investors today have actually lost 10 lakh crore rupees in trade as the BSE listed firm's market cap has also slipped below 410 lakh crore rupees today. 10 lakh crore rupees gone on that front. And this is across the board, larger pain from the broader markets that we have seen in trade today right there. Okay, viewers, but pain as what it has been, and some of the experts still expect more downside and more volatility as we inch closer to the expiry as well as the union budget, which is on Saturday as well. So brace up, there could be some volatile moves right there. Globally, the action also seems to be dwindling, but we'll see how things progress. US Fed meeting will be important to track globally. Tomorrow, 28 January onwards, is when things will start picking up pace there, and we will also get cues from Wall Street on that account as well as we move closer to the expiry session for this month right there. But so far, it's been a weak start for the budget. Let's hope things improve, but keeping our fingers crossed on that one. How do you deal with the markets, the volatility right now? What strategies do you need to adopt? Well, keep listening to all the market masters who we are getting for you to really understand how are they assessing the current market situation and the strategies ahead. Stay tuned on Business Today Television. Thank you so much for tuning in for this one.
Good morning, Davos. It is absolutely fantastic to have a packed house early Friday morning.